want to bring another voice into this conversation, talk about U.S. growth and the potential impact of the coronavirus. Joining us right now is Allison Schrager, senior fellow at the Manhattan Institute. We can talk about these numbers, or we can say these numbers are out of date. What do you think?
Well, I don't think they're totally out of date. I think Steve brings up a good point in that, you have a supply shock. You don't know exactly how it's going to play out, but you do want to look at how resilient are you to handling that shock. And the fact that, we're going into it fairly strong is a good sign.
Goldman Sachs also out with a report this morning suggesting there could be zero growth this year.
For the whole year.
That's their expectation.
No, I think it's in corporate earnings.
In corporate earnings.
In corporate earnings, not in GDP.
If it were to spread widely, that by the way is not their baseline scenario. Yeah, I think everything's on the table. I mean, when you're looking at how a shock plays out, there's a whole range of things that could happen. That's possible. I don't know if it's probable, but
so what is probable in your mind?
I think definitely GDP is going to be a lot lower this quarter.
Right. Like what?
I don't know if it's going to be the full 100 basis points drop that they have expected, but probably, it's definitely going to be lower, maybe, definitely less than 2%. But, I mean, it depends on it's unknowable how long this is going to play out for and how deep it's going to be. I mean, as I said, a lot of people are expecting the V-shaped recovery afterward. Right. That could be at the end of the second part of the year. We don't know.
If you're Jay Powell, what do you think he should do?
Well, I don't know what he should do, but he's most likely, I think, going to cut rates because he tends to be risk averse.
Steve, do you think is there something he could say before doing anything?
I think Jay Powell does not want to cut rates here.
Right.
Especially in response to the market. I think he doesn't want to have his hand forced by the market.
Right.
I think he felt like he was perhaps in control for a bit because he had engineered this hold from the rate cuts.
Right.
And I thought he thinks he's in a good place, both the economy and monetary policy relative to the economy. I think he would like to see, before he moved, some real data that backed up the idea for a move that didn't seem like he was reacting to. Now, the idea of acting preemptively when you're close to the zero rate number is pretty well established, I think, Allison, in current post-financial crisis monetary policy thinking, is that when you ain't got a lot of bullets, use them early. And I think Powell probably subscribes to that idea. There is this outstanding question in my mind, which is beyond, I would call it a placebo effect, but it's a little bit understated, of a Fed rate cut. How do Fed rate cuts, maybe Allison, you want to take on this question, solve the supply problem coming from China?
They don't. I mean, I think the way to think about it is recessions or low growth comes from external shocks.
Right.
And all the Fed can do is take the edge off of that. I mean, the concern is, I think one thing they're probably going to debate is if we cut rates now and this thing gets a lot worse, are we going to have less ammunition to deal with that?
And what do you think the answer is?
I think it's tough. I mean, if they don't cut rates and the stock market keeps falling, I think people are like, where's the Fed here? And it could get even worse. So
what's the breaking point?
I think it depends on, how markets play out. We're going to know a lot more in a couple of weeks of how infectious this is, what the mortality rates are, how well governments are containing it. So we're going to know more before then.
Allison, you've written a book, An Economist Walks into a Brothel. What happens?
I learned how to...
Yes, that's the name of her book.
That's the name of the book.
That's the name of the book.
Way to catch attention.
What happens?
Well, it's the same thing. It's like, how do different markets price risk? And what's the risk premium on sex? Or, what's the risk premium now? The whole premise of the book is how financial markets price risk is the same everywhere.